for a time.
Hello, welcome everybody. My name's Clark Taylor. I'm Shareholder Relations Manager for Fern Farms Co-op. Welcome to the 2020 AGM for the cooperative. We're delighted that a number of our shareholders and suppliers were able to join us here today. It was something we weren't able to do last year, and I guess one of the mysteries of what will a hybrid meeting do this year. So it's great to see it turn out. And also, thank the exec team from Fern Farms Limited for coming along as well. They'll be sent all the difficult questions to answer. We're also delighted that we're also running a virtual meeting. So we've got a number of shareholders that are able to join us from the comfort of their own homes. So again, this is an opportunity to reach out to a far wider community than what we could with just a physical meeting. So we're delighted with that. We'd like to thank our share registry, Link Market Services. They pull all of this together for us and do a terrific job. And also for Strawberry Sound that have put together the electronic piece and doing the streaming. So thank them. Also, there's a number of people within the business that do a huge amount of work behind the scenes to bring this together. And I think Justin Courtney and Ben Thomas in particular. So they've done a terrific job. Just a small number of health and safety matters to cover off. In the unlikely event that there's an emergency, just head down that hallway, down the stairs, and we'll congregate out near the car park behind the distinction. And if anybody needs to take a wee comfort break, there's toilets just out here in the hallway, so you can take care of those. I'm just going to cover off a couple of things that will relate a little bit later on. This meeting's split into two. We will be starting off shortly with an overview of the operating company. That's the business that processes and markets and sells your livestock. And then at 2 will be the formal AGM of the cooperative. In front of me, on your screen, you'll see a virtual meeting guide. So questions can be submitted for those of you that aren't physically with us here in Dunedin today. You can submit questions through the online portal, and during the question times there'll be an opportunity for those questions to be asked. There's a question box we'll be showing, which I'll show you shortly. In addition, there is an opportunity to place your vote. So during the course of the annual meeting, there will be voting on one resolution, and that is that the Fern Farms Cooperative Limited Board of Directors be authorised to fix the auditor's remuneration. So at some point during the AGM, there's an opportunity to put your vote. If you're joining online, you can vote at any time during the meeting. You can click the Get Voting card within the online meeting platform, enter your shareholder or proxy number to validate, and also then mark your voting card to indicate your vote. Voting will remain open until 5 minutes after conclusion of the meeting, and the results of the vote will be announced on the unlisted market later on today. That's basically, for those of you that are online, that's the form that you can see and go and I guess follow the Get a Voting Card or Ask a Question boxes. We know that our shareholders are very interested in how our major investment is performing and insights into the markets globally. I'm delighted to welcome Simon Limmer, Chief Executive of Fern Farms Limited, to talk to you today. He will talk a little bit about 2020, but more about how are we navigating local and global markets today and the outlook for the months ahead. Simon will be available for questions at the conclusion of his presentation. We will then have an intermission of about 5 minutes prior to the start of the annual meeting, which will have a 2 p.m. sharp start. So, Simon, welcome.
Thank you, Clark. Tēnā koutou katoa. Welcome, everybody. And it is, as Clark says, it's quite a shift from last year. I can't sort of work out whether the AGM from last year feels like it was yesterday or about 100 years ago, but there's been a bit that's happened in between. It's much more human to have your faces in front of me for those of you who are here in attendance, and staring down the barrel of the camera feels very familiar to last year's meeting where Richard and I stood in a very lonely boardroom at Silver Fern Farms. As Clark says, I'm going to take hopefully not too long here just to give you my sense of how 2020 has performed and how we're tracking in 2021. I think it's a far richer a meeting if we do have your questions and feedback, so we will leave plenty of time for that. And as Clark also says, our very capable executive will be here to answer your tough questions. So I see them all expectantly sitting in the front row awaiting. Have I got that right? Not yet. There we go. Really sorry, but you do not avoid this image. You probably have seen it every day for about the last 18 months, and I think we're all absolutely sick to death of it. But I guess it is the thing which has absolutely symbolised what we've been living with and the impact it's had on us in our lives and our businesses around the world. I just want to try and characterise a little bit what it meant for us in 2020. And the first thing that I'd say is uncertainty. So COVID came along in China. I recall a very inadequate conversation I had with my team where I made the prediction that it would be all over in 2 weeks. Felt quite uncomfortable about a month later, and it's something I don't talk about often, so I've just really outed myself before you today. That was based on the SARS relationship, on the SARS experience. I think the previous sort of pandemics or local outbreaks that we'd seen, and I don't think we imagined at any time in sort of December of 2019 or January of 2020 that this was going to have quite the impact. But that uncertainty really sort of epitomised itself for me when we went from level 1 to level 4. And that sort of moment in time in early March. And I remember ringing Ray Smith, who's the Director General of MPI, and sort of tentatively, somewhat embarrassedly asking him, are we an essential service? And the uncertainty was really evident when he came back to me and said, I'll get back to you. So I think we'd just moved into a whole new world. The Prime Minister had made this, set up the 4-level protocols, but really nobody knew what it meant, what it was going to mean for us. How long it was going to last for, what was the impact going to be on the business. But I thought that was quite symbolic of just how unclear our future was at that moment in time. I think the second thing that it really has meant for us has been disconnectedness. And to give you an example of that, we have a market manager in China, Alex Wong. He's been with the business for nearly a year. I'm yet to shake his hand or have a beer with him, which, for someone who's one of our very senior leaders in our most critical market, the fact that we don't know him as deeply as we really would like to is just a symbol of that disconnectedness. And similarly, our operating company board has not met face-to-face for 18 months. And so if you think about the dynamics of how that works, the relationship between the shareholders, the cultural differences, that disconnectedness is something which we've really had to grapple with and learn to live with. I'm pleased to say that in most cases we've found ways around it and we have connected quite successfully, and we'll talk a little bit more about that in a moment. And the last thing I'd say about the COVID environment for us has just been the constant change. So just such a dynamic environment that the plans that we made this morning are no longer relevant this afternoon. And similarly, tomorrow we will be starting again and just thinking about what's happened overnight. So just a phenomenally dynamic environment where things have constantly changed. And the processes that we've had to put in place for the businesses have meant that that every day we've had to come together again and just continue to find solutions to situations that we hadn't really imagined. Technology has obviously facilitated that. We've learned many new ways of reconnecting and ensuring that we are making decisions in a timely way. And in some aspects, it's been really good for us. It's been very, very healthy. And the rhythm of the business has changed from sort of longer cycles and plans to much more agile requirements. So you're familiar with these numbers. I'm going to cut to the numbers early on, and then we'll just talk a little bit about what they mean. I don't want to dwell on each line here, but I do just want to point out a few highlights, or what I consider to be important in what you're seeing. Revenue on a livestock equivalent volume, which is more or less the same. We know that in New Zealand that livestock is slowly declining, but it's more or less stable from one year to the next. So we haven't had more volume to sell. We've had a slightly different livestock mix. But the revenue number of 2.5 compared with 2.6 billion the year before, not really a meaningful shift. And when the livestock numbers are the same, what we're really seeing is just a different market that we're selling into, a slightly more depressed market given the COVID situation in 2020 and the really strong China market that we were seeing in 2019. And secondly, a foreign exchange volatility, which has really been quite significant in 2020. For example, we had a range of foreign exchange that went from 57 cents right the way through to 72 cents in 2020. That was pretty significant. The next point that I would like to bring your attention to is, of course, the net profit. So pretty similar numbers again, 70 million in 2019 and 65 million in 2020. They do represent probably our best 2 years in recent history. So we're really proud of those outcomes, and I think under the circumstances, something that I think give us confidence that our strategy is the right one and that we're moving forward in the right direction. 4 years of consecutive profit. If you think back to the previous decade, that was something that was quite unusual. We saw a lot more volatility in our industry, so that's meaningful. And we set up a 5-year plan in 2018. We're now into year 3 of our 5-year plan. What we announced was that we were expecting to make $150 million of consolidated profit over 5 years, and we're tracking at about 136 million after 2 years. So we're well and truly on track. We wouldn't say that we're banking it just yet. There is still volatility in this industry and a little bit of water to go under the bridge, but really, really satisfying to be so far ahead of where we would expect to be. Also, capital investment, 52 million in 2020 compares with about 32 million the previous year. And that is 4 years of consecutive investment of about $130 million back into the business. So a substantive shift from where the business had previously been in terms of its ability to invest back into infrastructure and strategic initiatives. So conclusion for me, really satisfying results and a strong financial position, a really strong balance sheet and a stable environment for us to continue to execute on the strategy. Okay, so talk a little bit about what we saw in 2020. Obvious place to start for me is in the markets, and certainly it was a roller coaster in 2020. You'll recall 2019, very, very strong returns out of China. We saw a correction in the Chinese market, mainly a manipulation of some of the protein volumes that were pouring into that market, released by the Chinese government at that point in time to bring prices back to a more affordable level. And then we saw the COVID impact in China in the first quarter, and then the disruption to the Chinese supply chain, which meant that we saw a complete shift whereby we were selling about 35% of our volume into China in 2019. Over the course of 2020, we dropped to about 25%, and we saw a massive increase, particularly into the North American market, but also a 35% increase lamb volumes into the EU and UK. So we were really pleased to have that optionality, those traditional markets, which afforded us that capability as well. So significant shift in those markets at a global sort of macro geographic level. But probably more acutely, we saw the channel shifts and the move away from food service the move into retail and in particular the move to e-commerce. So on the left-hand side you see 100% reduction in US food services over the first quarter of 2020. So people just had to stop going to restaurants, as we know. And then a gradual recovery of that restaurant industry, but we know that it's still a long way back from where it was. $240 billion worth of lost food service sales in 2020 in the US, I believe. But we also saw the rise of e-commerce, and on the right-hand side you see about a 300% increase in e-commerce sales, so online sales into the North American market. So trends that we can't ignore, really impacting our business significantly. Probably the thing that gave us the most confidence is that our products were still absolutely relevant to consumers. People were still looking for the attributes that we have out of New Zealand. Food safety, a big thing when there's a pandemic on the rise, but also nutritional products, well-raised products, sustainable products. The attributes that we know are making us more and more relevant today were still relevant in the COVID world. In fact, potentially even more so. It was the connection with the consumers which was the challenge for us. And just before we talk a little bit more about how we achieved that, a couple of illustrations here which demonstrate that if we don't have geographic diversity and we don't have channel diversity, we can be really captured by niche products going into certain channels. And French racks, which are predominantly food service and a big chunk going into North America. And similarly on the right-hand side, what you see there is venison. I think the venison story is pretty well known at the moment. Too niche and too geographically limited in terms of where we can sell that product. And you can see the impact on the returns for farmers in these two cases. So really significant impact. Optionality, it's a word I use really regularly, but it is so important to us to have different channels, different geographies, different customers to ensure that we continue to move product and we maintain tension and competitive prices. The good thing for us also is that beef is a far more broadly accepted product. It's consumed all around the world in much greater numbers. Lamb for us is something which we would consider mainstream, but it is still quite niche in many markets around the world. Venison, far too niche in my view. But we have been successful in adapting, at shifting. You see there retail packs into China, so Chinese Silver Fern Farm branded Chinese retail packs hitting supermarkets in Shanghai through a recent partnership with Good Farmer up there, but also other partnerships that we're developing into that market. Those relationships are critical for us to be able to tailor the products, adapt the products and ensure that they're still finding consumers who are looking for our fine foods. Similarly, Mark's Foods on the right-hand side. Mark's is traditionally a big food service customer, has been with us for many, many years, and they have also managed to reinvent themselves, position themselves in the retail space, create an online market, and then ensure that they're still relevant, because their business was going to fail if they didn't find that solution. We are currently in about 700 stores in retail in the USA. We have developed online relationships around the world, an e-commerce strategy in the US which is evolving very, very quickly. And even in New Zealand through Gourmet Direct, you're probably all familiar with our online platforms today as well. So we are shifting and we are managing to find those consumers looking for our products. The big talking point, of course, is the global supply chain. This is the thing which is really hitting us hard. But I just want to remind you a little bit of what happened in 2020. COVID came along, hit China first, as we all recall, and that first quarter of the year we were all watching to see what would happen. Chinese New Year came, I think, around the end of February. Everyone went off on their holidays, as they do in China, for about a week. but it was about another 6 weeks before they were able to come back. And so the Chinese ports effectively closed at that time. The global supply chain was so heavily impacted by those decisions in China to deal with COVID, and we all know that successfully they were able to keep people at home, deal with COVID, and then get back up and running. At the time for us, it seemed outlandish that that would be the approach. Of course, we all know that the rest of the world has followed suit more or less. But the impact on the global supply chain, massively disruptive. The flow-on effect as those Chinese ports closed just meant that we have never recovered from that moment in time, and the disruption today is significant. We are walking a really narrow tightrope when it comes to our supply chain, and I think we're more acutely aware of that than we ever have been in the past. When the ports close, the shipping schedules become impacted. When the shipping schedules are impacted, container availability starts to be disrupted. Containers aren't moving back to the ports that they were expected to. The local supply chain then starts to become impacted. That means that our cool stores are then filling up to capacity. When our cool stores are at capacity, our processing capability is compromised, and when our processing capability is compromised, it's the people back on farm who are left with very few options. And then when you have a drought on top of that, it becomes quite a challenging situation. That is a really, knife's edge that we live on, and we know that we're living on, hence the need for daily decision-making, new plans, adaptive thinking, just to ensure that we can keep that supply chain moving as quickly as possible. There have been some really challenging moments in the last 6 months, and I'll come back to it, but we're not quite through it yet. I think we are very, very thankful for our relationship with Kotahi. The way that we feel as though we are treated as a priority customer and able to find solutions continuously has been really, really important to us. But this is something that's going to require further thought. Just to illustrate it a little bit further, what you see there is schedule reliability. Those are percentages out of 100 on the left-hand side, but you can see the green line. That was the reliability, which dropped from about 75% in the middle of the year down to around sort of 40%. It's sitting at 35% as we stand there today. The reliability implies that the ships are actually sticking to the schedules that they would be planning for. So when our planning is based on their shipping schedule and they're only 35% sure that they're going to get there, you can imagine the flow-on effect that it has back for us. 85% of vessels are off schedule. 3 to 7 days delay is about the norm. Level 1 to level 4, I talked about it before. Were we an essential service? Of course we were. We had to be. But it didn't come as a free hit for us, as you all know. Social distancing, PPE, implemented in our plants at 1 week's notice, essentially. And I can tell you that our operational team, our people team, in fact, everyone working together, managed to implement the expected government protocols in a very short period of time. Those protocols evolved over 1 week. We had to negotiate them essentially with MPI, and that involved a couple of meetings a day and a lot of back and forward amongst the industry, the various different meat companies. Good cohesion across the industry, I have to say, good collaboration with the various different companies on these issues. And a pragmatic outcome ultimately, but it impacted productivity by 50% in the first week for us. So you can imagine at the peak of our season going from 100% to 50%. And then over time, we managed to claw our way back up to about 90% productivity, still implementing these protocols. So the social distancing, about a 30% reduction in the people in the plants and all of the barriers and the PPE that you can see in these photos. Our people needed convincing first and foremost that they were safe to go to work when the rest of the world was locked down. The unions needed convincing that we could look after those people and do so safely and ensure the continuity of the plants. The government needed convincing that we were going to manage to do this and convince our offshore partners that market access was still going to be affordable for us as well. Phenomenal outcome in my view in terms of how we dealt with it. And that productivity gain taught us a lot about ourselves and how we need to operate going forward. I believe that we did better than most, which was a significant challenge considering we had 7,000 people and 14 plants operating at that moment in time. We had 2 COVID outbreaks in 2 of our plants. But but we gathered market share through that phase quite substantially because I feel as though we were operating far more successfully than some of our counterparts. And I'm very proud of that outcome. I think it was probably the most significant thing that happened in 2020. We continue to invest $52 million in 2020. Critical risk, health and safety, environment, $12 million into health and safety initiatives, $13 million into environmental initiatives into the plants. You can see that we spent $10 million on the COVID response alone. That was PPE, that was the barriers, that was the different changes we had to make to the plants. We got an upside of about $8 million from Streamline. Streamline is our continuous improvement initiative. That is lean manufacturing, for want of another name. And that's something which is fundamentally changing the way we work, the way that we empower our people to take responsibility for their activities and find better ways of doing things. And we're getting phenomenal value out of that. And I think culturally, the empowerment of our people is probably one of the things that we don't get a direct value from, but we really feel the sense of inclusion and empowerment. Pacific marshalling floor, you see up there, $17 million. That's an investment that we're making this year, but it was something that was in the pipeline already, and I'll talk a little bit more about that in a moment. But probably most importantly, we're starting to focus on those strategic investments that actually give us a better return than just standing still. Investment in infrastructure that's required for critical activities to ensure that the infrastructure is up to date, but we're actually starting to move forward more than we ever have probably in the past. That's significant. Tough year for farmers, tough year for suppliers, and some really significant challenges with the weather and with the wait times. COVID obviously created quite a significant backlog of stock on farm, and that was exacerbated, of course, by some drought in particular areas as well, and some actually pretty torrential rain in some areas, I recall. Overall, on the left-hand side, the farmer returns were particularly good for lamb and mutton, and relatively stable for beef. In a year that was very challenging from a market perspective. Venison on the far right-hand side, you can tell, is the anomaly in all of that. But for me, the symbolic here is that we can continue to run a profitable business. We can continue to invest heavily back into our business. We can continue to pay a dividend to shareholders and procure competitively. In fact, our procurement rates have been improving. Our relationship with suppliers has been improving significantly, and in particular, and most importantly, with shared suppliers. So shareholder suppliers, really, really important to us. And we can see that access into the various different programs, I think it's about 87% shareholder prioritisation into the 100% program, about 70% into the beef programs as well. So shareholders getting to the front of those queues, really important to us. And more programs to come. I think key to this is that we are continuing to link the market back to the signals that we are offering to suppliers, ensuring that they are joined up to the markets, responding to those market requirements and being well rewarded for it. So more of that to come. You'll also note third-party reliance. We have moved substantially away from using third-party agents, ensuring that our own livestock teams have a direct connection with you. We feel as though that is really important in terms of that connection back through to the market. And shifting away from that is a significant challenge that we're taking a lead on, and we're really determined to keep implementing. It's been very successful in the South Island. We've got a little bit further work to do in the North Island, but you will continue to hear us be very strong-willed about the relationship with suppliers, which is critical to us. Stakeholders overall, I think the comment I made up front around disconnectedness, there was real risk that we were losing those relationships, particularly in market, particularly offshore. and our ability to continue to move and be agile was really going to be dependent on our understanding, the depth of understanding and the strength of the relationships that our sales guys have had with those customers. Thankfully, those customers, for the most part, we've been working with for many, many years. The depth of understanding of where the real pinch points started to happen on both sides meant that we could adapt, and the trust was there to keep product moving through the pipeline and into the markets. Really important for us. Secondly, our people, I've already touched on the confidence that we needed to create in our people that it was safe to come to work, and the communication and the work that went on to continue to ensure that they did feel as though they were the priority, and turning up to work was the right thing to do when the rest of the country wasn't. Government relationship has been strong. I've already talked about the negotiations with MPI. I think it was a critical moment in time where we really did close ranks, I think, and found some very pragmatic solutions in a very short period of time. And I've mentioned the unions before, but I really would like to reinforce that I think the unions are critical in the way that we deal with 7,000 people. It's a real challenge for us to find people at the moment. You're all reading about that in the newspapers. Our ability to attract and retain people, to ensure that we're capturing as much value as we can from the products that you supply to us is a real challenge. But the relationship with the union is probably as strong as it's been. They're pragmatic. They see the challenges that we have, and I think that there is an opportunity for us to continue to work more closely with them and solve some of those issues. Community, as an essential service, we really felt the love, I think, from the community, people fronting up to work. I think suppliers, as much as anyone, feeding back into the people in the plants how much they appreciated what they were doing through those tough times. Initiatives like Meet the Need, that is something which I think has showed real leadership, responding to a societal need that I think we're all aware of, and actually leaning into doing something very pragmatic and meaningful about it has been a significant outcome. But there's a lot of community work that we're doing, and more that we should be doing. As an employer of our size, it is very much our responsibility to ensure that we are taking people with us. And then finally, just a word about the shareholders. We have 50% of the shareholding in this room with our cooperative shareholders. The other 50%, of course, sits offshore in China. I've already said that we haven't, managed to have a meal with them or a glass of baijiu or something else with them for about 18 months. And that's tough, because the set-piece meetings that we have are very prescriptive. I'm going to knock that thing over in a moment. Very prescriptive, and don't really afford us the opportunity to have the depth of conversations and understanding around expectations and direction of travel that we should have. We're finding our ways through that, but it's fair to say that we're very thankful, I think, that the relationship is enduring, and that to date we've been very successful in ensuring that we keep moving forward with support from both of our shareholders. And as an executive team and as chief executive, that's obviously critical for us to ensure that we keep moving forward at the pace we are moving, because it is quick. So that's really a bit of a flavour of 2020 for you. I'll pause for a moment if anyone has some questions on 2020, but we will come back. I really just want to talk about where we're at now and where to next. I think the good news is we're tracking pretty well. We are into past quarter one, into the second quarter. We probably went into 2021 with the expectation that it was going to be worse than 2020. And certainly with the board, with the executive at the end of the year, when we set our expectations around budgets and what have you, we said, I think it gets worse before it gets easier. And 2020 was full of uncertainty, but 2021 has probably got more certainty that it's going to be harder. I don't think we're disappointed. I think it is really, really hard. But I think the upside is that there is, one, very strong demand for our products and markets. So what we've seen around those attributes that we deliver to them still remain really relevant to consumers around the world. And that's the most important thing, because that is enduring and that is our future. We're also seeing, I think, some positive signs. I think there was an announcement a couple of weeks ago, 6% economic growth was the global expectation in an environment where there really was a lot of doom and gloom maybe 6 months ago. It's feeling a lot more positive today. Overall demand for protein, very, very strong. We're not going to solve the protein deficit out of New Zealand, but that's a good thing for us. There is a protein deficit and we're going to have to find other solutions. Confidence of recovery. Vaccinations around the world seem to be building momentum, not so much in New Zealand. And I do think that that's a problem for us. I think for us to get back out there and get reconnected with the world, we need those vaccinations rolled out and we need to make that a priority for businesses such as ours. So, but our reputation is still strong. New Zealand's reputation is strong. The integrity we have through our food chain and the way that we go about things, I think, will stand us in good stead. There will continue to be that shift to the new channels. E-commerce is a real thing today. It has accelerated in 3 months what was anticipated to take 3 years. That probably won't go backwards in a hurry. That is here to stay. Retail has evolved as well. Bricks and mortar are evolving and the way that people are buying our products continues to change and we have to adapt with that. China is an established strength. It's a powerhouse. It has been for a few years. I think prior to that we saw volatility as China came and went. We did see China drop off in terms of market share in 2020 compared with 2019. It's back to where it was in 2019 for us today. I don't think it's going anywhere in a hurry. I think that's a good thing. But we also need that US counterbalance to ensure that we have choice. And you all read the papers. 2 comments here. One is that there are political challenges which are going to be really tough for our politicians to navigate, and we are reading about it every day at the moment. We can only continue to encourage them to make sure that economics and politics stay as wide apart as they can. The reality is we need all of these trading partners. We want them. We've been successful in navigating that middle ground for many, many years, and we must continue to do so. So the political agenda and the economic reality of our trading partners is something that we can only encourage our politicians to keep working on. Interesting time for New Zealand at the moment. China access also from a protocols perspective continues to be challenging for us. They are watching the COVID situation around the world and they are prone to shut down sites which aren't meeting their expectation around the way they manufacture. We've seen it in the seafood industry in New Zealand, and the meat industry won't be immune to further scrutiny. So that market access is going to be critical for us. The inevitable question is how much is too much in any one market, and we've had 2 board meetings in the last day. We've probably spent about an hour or two on that topic. How much should we be reliant on China for our returns? How much should we be reliant on other markets? I don't think there's any simple answer. We take value where it lies. We have to invest in the relationship. We have to get behind the border. We have to have people on the ground in those countries. We do that through our entity up in China. We do that through our shareholder partner in Shanghai Mailing. Good relationships behind the border will give us at least a heads up as to what might be coming, give us time to adapt, but it also gives us the opportunity to influence and provide feedback as to what's going on back in New Zealand. I feel that's the best mitigating strategy that we can have, and we'll continue to invest in people and friends behind the borders. Try and take about another 5 minutes, try and move through it quite quickly. But the global supply chain, we continue to live in this world which is going to be challenged. We're looking pretty good through the peak of the season. Dan Bolton over here works very closely with Kotahi, has made some pretty solid plans that take us through to about the end of June, and that's the peak of our season done. So we're relatively comfortable as to what's ahead of us, but that doesn't mean on a daily basis we still don't have to adapt and keep really, really acutely aware of what's going on. Kotahi is important to us. There's no immediate solution to this. This is going to be around with us for probably the foreseeable future in this year at least. And we're going to have to get innovative as to how we think about it and find other solutions other than just containers potentially. But the good news is that behind that supply chain, the demand is still there. We have demand, we can sell product, we just have to get it there. Supply. So the relationship with suppliers is as critical as the relationship with consumers. And if you've heard me talk about it before, there are two critical stakeholders in our industry. It's the consumer and it's the producer. And the closer that we can bring them together, the more successful that we're going to be. So we continue to invest in supplier relationships. We will continue to do so in 2021. And how we're going to do that is just to ensure that those market signals, those programs, and you will hear more and more talk about sustainability and sustainable programs, carbon positive products, NZFAP plus programs. We are leaning into the challenges that Hei Waka Reka Noa and carbon reporting are placing in front of us, and regenerative farming practices are something which are real in the market. They have a value in the market because people perceive that to be what they want. Whether we like the term or not, we have to acknowledge that's what we should be doing. The reality is we do it. So let's keep moving forward and embrace it. And tying all of that together is going to be our investment in digital technology and traceability, so that we can ensure that the integrity and the way that the consumer looks back through their tools at how we produce is going to be relevant. Continuing to invest, $52 million last year. We will be investing more this year. Final number will depend a little bit on how we're tracking, but we're already committed to a much bigger capital investment this year. It continues to be into infrastructure. It continues to be into critical risks, environmental risk. But we are, as I said before, investing in things such as the Pacific Marshalling Floor, which is going to give us greater capability to capture more value from markets such as China. So really important investments. And you can see on this pie graph, there's a big chunk there called capability building. And this is about technology. It's about new systems that we require in our business, our ability to connect end to end, about traceability, the way that we manage the business, the way that we think about data. If we're going to be successful going forward, knowledge, data, digital tools are going to have to be something that we become far more sophisticated in. And the time is now, with the stability that we have, the capability we have in the business, to invest. So last slide from me. I'm just going to dwell on this for a minute. This slide, if you're familiar with it or not, is what we presented in the end of 2018 as kind of the one-page framework for our 5-year plan. And at the top of it, it has that objective that I spoke about earlier of ensuring that financial performance is top of mind. We hadn't been successful enough in the past, and that meant that we couldn't execute on strategy if we didn't have financial stability. That financial stability feels as though it's far more apparent in our business today. And as we stand here today, we are tracking well ahead of that $150 million over 5 years, and we're only 2.5 years into that plan. So that's a great story for us. And at some point, we're going to have to renew that and come back to you and tell you what our next ambition is. Just think 2021, with this uncertainty ahead of us, we don't want to get too far ahead of ourselves, so we'll just take a few more months and then let you know. But critically for me, the number one priority for our business is to really create a deep market-facing organisation capable of understanding customers, understanding consumers, having a really strong connection to them, and affording us that optionality in the future to be able to really ensure that we're capturing value where we need to. It's about investment in digital capability. It's about investment in people and markets. It's about turning ourselves truly into a global food marketing organisation. And we're well down the pathway on that, but we're not there. So we've got to keep moving. Infrastructure, supplier relationships, information, all of those things are going to be critical to our strategy. But ultimately, for me, we have the right strategy and we're executing on it as hard and as fast as we can. We just need to keep going faster. But the good news is, from my perspective, we have the financial stability and the capability to execute on it. So we're in a very good position, I believe. I'm going to stop, catch my breath. Questions? Sorry, there'll be a protocol here.
Sorry, because this is being streamed, you can't ask questions until there's a microphone in front of you. So if you could say who you are and then ask your question with the microphone, that would be fantastic. Thank you.
Yeah, Philip Wilson. Yeah, so look, you mentioned that part of your strategy is to try and get producers and the consumers as close as possible together. I guess the interesting thing is if you look at the shareholding in the company, you've sort of got producers that own half the company and potentially a customer that owns the other half. And I guess one of the things that I keep thinking about is, we want as much as we can for our stock. Now, I'm assuming that the people that are buying it want it as cheap as possible. And so I'm just wondering how you handle that, how you keep on top of that.
Yes, I guess who's stuck in the middle of that? You're absolutely right. I think, look, that tension is apparent whether they're a shareholder or not. That tension is apparent. And I think it's about balance. We every day are having to look for that balance to ensure that we've got it right. We have to look through the farmer's eyes in terms of what their commercial reality looks like and how they can have a sustainable business and invest and live at the same time. And similarly for our customers, they have to be able to be making money. They have to be able to be investing with us, alongside us in the brand and in the market channels and what have you. So the balance of value needs to be fair. Risk and reward needs to lie where it's earned. And ultimately, I think the only way that we can do that is through the depth of the relationships we have and the knowledge that we have of our partnerships. And I say partnerships rather than customers because that does imply that we have a deep, intimate understanding of what their requirements are and how we need to go about servicing them. But you're right, the tension between those two stakeholders is always there, but that's kind of where the value is created as well. So navigating that middle ground for me probably means we're doing okay. We've got anyone online? Clark, do we know? Gee. Simon.
Simon Davies. Just a question about relationship with the central government in terms of some of the decisions that they are able to make, I guess, with their current voter mandate, does pose some risks to us in our sector. So are you guys sort of, for a better term, reminding them of Economics 101?
Yeah. Look, I think it's a really relevant question. I think the advantage that we have compared with 3 years ago is that it was really political back then, and the reality has struck home. One is that they can't be quite as political and walk the talk as well. And then secondly, that COVID's come along, and guess what? The primary sector is pretty bloody important to this country. And I think that is clear. There have been signs that they're taking a more pragmatic view to climate change, to water reform and what have you. I know that it's still really coalface for people who are living it on a daily basis. We are working really hard to engage. We're making submissions where we can. We're talking as regularly as we can with the politicians and looking for pragmatic solutions directly and through the industry bodies, MIA, Beef and Lamb and what have you. Look, Silver Fern Farms has a responsibility. We're too big and in fact we probably have a stronger voice in some regards if we get out there and use it more actively. So we're endeavouring to do that. We will continue to listen to you and ensure that we can be your mouthpiece as well.